Hey traders, how's it going? Nick from Vant Trading here, coming at you with our top trade plays of the prior week. Today I will be covering the trades from the trading week from August 16th to August 20th of 2021. And I've got three stocks here for you today. I'm going to hone in on them. They are all three the same stock setup, however, and these three provided some insane trading opportunities despite whatever the market was doing. They had some earnings catalysts. Many of them had some crazy expectations that they beat. Others beat their competitors, so on. So we're going to dive on into it. We're going to talk about why these three were in play for not just the first day, but the days following the earnings event, and how these stocks can be learned from. And there are many ways you could have traded these stocks. You could have day traded them, swing traded them, whatever. So we're going to dive on in. And a reminder, as always, if this video is at all helpful, informative, or just entertaining, drop a like, subscribe for future video updates, and drop a comment below for any questions, comments, or concerns. Now, as always, let's dive on in here, and we're going to start off with the first stock, NVIDIA. And so this is our daily here, RSI at the bottom, our three moving averages on here. This is the earnings day. Now, the earnings day was a little choppier, a little more of a spinning top. The better trade, in my opinion, came that second day. But we're going to dive on in here. This is what it was looking like going into earnings. Kind of dropping off here. In fact, kind of saw that market weakness in general as well, dipping below the 50-day SMA, which we hadn't really done for several months. And so people were selling in front of earnings as well as with market weakness. Then NVIDIA comes out with earnings. Let me zoom in now to an intraday. This is a 5-minute. Let's just look at the price action for the earnings. So this is earnings day. Now, we had a nice little drop out at first after some of those initial numbers, immediately recovered and flagged pretty nicely. Good price action there. Their actual earnings were they beat on the top and bottom line estimates, so beat on EPS, beat on revenue. Their guidance for Q3, the next quarter, is above estimates. They're keeping their dividends since they just did a share split. And the only two kind of negative headlines there that probably were to blame for some of the initial weaknesses, they're doing a very large acquisition from a company called ARM. I believe it's a UK company. It's $40 billion. It's taking a little longer due to the regulations and regulatory hurdles that they need to clear. So there are some concerns there. And obviously, as is with the rest of the world, they're facing supply chain issues. They have insane demand for some of their chips compared to the supply they can provide. So, but that's not anything new. That's the world right now. So anytime you see that, I wouldn't put too much stock in that at the moment unless they say something serious about the future of that, because honestly, the entire world is facing those supply chain concerns, and it's not that surprising anymore. So that's where we are. You had that initial earnings drop, a little surprising there, a little naughty, a little shakeout, and I don't like it when it does that, but it did reclaim. This is the volume weighted average price, that VWAP that we love so much. Had a nice little morning pop here and flagged and held okay. Now, one big thing is this nice psychological $200 level. That is a big deal for us sometimes, where that clean $100 level can provide a nice opportunity and can provide some support or resistance. The next day, obviously, we flagged pretty nicely, and we saw the buying momentum really step in here going into the open. We saw those buyers get antsy. They pushed it right up into this important level. It was a nice little bit of resistance here, a little bit of toppingness, but we saw those buyers drive it up, and that gave us a little bit more interest in the preceding day's action as we got up over that 200, chopped around here, and had a very strong day. That strong day finished at the highs, and it finished at the highs of these 52-week levels. So this is actually a pretty good candidate going into next week as well, as this strong action should likely continue. These stocks that beat on earnings, as I'm about to show you two more, many times can run for many days. Looking back at earnings, look at AMD after earnings, Tyson after earnings, I believe Mattel after earnings even had a nice couple of days here. You've got plenty of stocks in here, and NVIDIA was one of them. There's another that was even cleaner in terms of its strength, was Cisco. Cisco was a very good stock to trade for both days after earnings and beyond. Reported the same time as NVIDIA, so you had some comparisons out there, and you saw kind of like the rest of the market, some of that selling, that weakness, that is kind of important because those shares were already at a little bit of a discount compared to the the previous week when these earnings dropped. That helps. That makes the stock probably more attractive for many of these investors. So it drops. Let's look at where it was going into the earnings action here. And this is the one that I was very interested in. And if you watch the morning video that we posted that morning, I said that I was very interested in this one because they beat on top and bottom estimates. They beat on EPS, they beat on revenue. Their next quarter is in line, all right, not above, but their full year 2022 estimates are currently above above analyst expectations. Their supply chain issues, they said, should hopefully go away by the end of the first half of the year, and they've had a lot of good changes within the internals of their company, supposedly. So really just solid earnings in there, especially next to NVIDIA. But it was trading slightly lower. Now, this didn't immediately make me want to buy. The price action is weak, so you need that confirmation. But we got that confirmation pretty quickly when we got up, immediately drove up, did a nice little dance up here, held on VWAP, which is a very important level for me, and reclaimed our dominance here. And that strength was all I needed to see personally. And you had a really nice day for the rest of the day. That strength continued, and this full strength is really nice because it did it on the earnings day, and it broke out to 52-week highs here, which is what I wanted to see because those 52-week buy. Hey, look at that. Look at how that day finished. So the next day, it's immediately in play for me because I want that continuation, and it was still in play if you watch that morning video, and we did get that continuation. Not quite to the same amount, but let's be honest, volume would have dropped off on the second day. But you still had the nice strong day. Had a little bit of a wedge in here into VWAP, had a little dance in the morning, and then on we went, and we finished again at the highs. This one again is probably going to be on my list going into next week. Another continuation play, and these plays you could have played either day trading, swing trading. You could have overnighted them. You could have played these a number of ways. I would never advise you hold stocks into earnings, and I would never advise you on how to trade. It's really up to your own trading style and risk parameters, but these were two of the most cleanest and strongest stocks that I traded last week. One more I want to show you, and it is another earnings play, and it's our boy Lowe's. As you can see, this one did very well with earnings afterwards. This is not the earnings day. Don't get me wrong. See this weakness that we saw before? This is because a competitor reported. Home Depot. Home Depot reported on earnings, and look, they actually gapped down. Now, obviously, they've since recovered. Ignore that. We obviously know what it did falling forward, but this is Home Depot's action. Home Depot missed on earnings, disappointed, gapped down to this 50 and battled around. Lowe's, meanwhile, got a similarly comparable hatchet job as they got crushed down here. So some serious selling action going into earnings. Expectations have been set. However, the Lowe's then comes out and beats expectations, beats on top and bottom line EPS and revenue. Their same-store sales were down, but they were down less than expected, so they beat on same-store sales, which was a big concern for them. Their full year 2021 estimates for the remainder of the year are above expectations, and they have a $9 billion share repurchasing plan for the full year of 2021. So that's where we were. We saw us gapping up, obviously, for good reason. The stock was on a nice little discount because people had sold it so heavily the day before. Many of those people were probably jumping back in saying, wait, no, I want those shares back. And so now the question is, okay, how is it going to perform? Going into the open, well, you really didn't have much doubt on that day. In fact, I'm going to zoom out here. We're just going to go to a 1 minute, kind of let you see the action a little cleaner because it spent a couple minutes in here holding, never dropped out from these levels, and off we went. Gave you a couple flags in here. Even if you missed it on the first day, we had some nice little levels in here. The following day, it dropped out, more or less held some of this support in here, which is a good sign. And more importantly for us, it held the opening print for the most part. And that's a level that we really key in on to watch control for the day. Held that day, continued, finished at highs, and continued on its merry way. So whether you day traded this one for 1 day, 2 days, 3 days, or you swing traded this, there was a lot of opportunity because there was expectations set from Home Depot's earnings. There were expectations set from imploding weakness in retail sales. That's another key here, is that prior to these earnings, retail sales came out and missed terribly in the U.S. So this is a retail company that, despite that, is seeing good EPS, is seeing good guidance, and everything within the company seems to be full steam ahead, and off we went to the races. This was also a relatively quiet stock, a stock that hadn't been running. All the moving averages were starting to get tight, so it hadn't been trading at much of a premium lately. You hadn't seen this running, and this became an ignition, a catalyst, and off it went. And we finished at a pretty decent level here. Got through, by the way, just like NVIDIA, I forgot to mention, right in here, psychological $200 level. And we battled around here for a little bit, got back above, and off we went, and off we go. So this one, again, probably like Cisco and NVIDIA, going to be on my list going into next week. The volume is dropping off, though, so expectations need to be curtailed, and we'll have to see where the market is and a lot of that. The market did help with some of these, obviously, because we saw that strong resurgence in the final 2 days. The market, these stocks don't trade completely in a vacuum. We need to remember that. But these were good earnings beats. They were good expectations. Many of them had been quiet for several weeks, if not months, and many of them provided fantastic opportunity to really see some ignition for following days. They could be in play next week. The volume could completely disappear as the market moves on to other things. We will see. But this is a play that we've seen time and time again, where some of these blowout earnings days, even if you're patient and wait for the following days or whatever, provides a lot of opportunity. Sadly, we are starting to push into the tail end of this earnings season, but there will be plenty more trades for us to talk about and plenty of opportunities to make money. I appreciate you all for tuning in. As always, I will see you all on Monday for the morning market analysis and the Vant Rant podcast Monday through Friday. And as always, safe trading.